Welcome back to Retirement News Online. Find out more at retirementnewsonline.com. So for many people changing jobs or approaching retirement, one of the biggest financial decisions they'll face is what to do with that old 401k. Yet too often rollovers happen without a really clear strategy, potentially missing opportunities around taxes, investment flexibility, income planning, and long-term wealth preservation. Joining us once again today is strategic asset advisor Nareena Khan, founder of Titan Capital Strategies right there in Bethesda, Maryland. And she works with individuals and a lot of business owners too to help them, make informed financial decisions. And today we are discussing what people should know before making a 401k rollover decision. So Nareena, when someone leaves an employer, or they retire, what are some of the biggest mistakes that you typically see around this particular topic?
So one of the biggest are folks that have an old 401k from a previous employer.
And there's a lot of them out there.
And there's a lot of them out there.
Yeah.
They do nothing. That money just sits idle, untouched, without a strategy. And they get so busy in their day-to-day called life that they don't take the time to figure out what should I do with it. I have clients who barely remember they have it, how much is in there, or any specifics. So first thing is they do nothing. Second is a lot of folks spend 30 to 40 years accumulating wealth, but they have no plan on how to convert that into a lifetime paycheck, right? They treat their retirement the same as the accumulated years. So that's a very big mistake. Another one is they underestimate the sequence of return risk. Now, everybody's heard that phrase. What does it mean, right? Mm-hmm. Well, let's take 2008. The market tanked 48%. People lost overnight. It took about 4 years to recoup, break even, and then start to grow. Right. Now, for folks that were in their 30s or 40s, they had the luxury of time. So that market downturn was inconvenient. Mm-hmm. But for folks that were in retirement, it was a catastrophe, and we saw that. A lot of people that were going into retirement had to delay it by 7 years. And those that were in retirement had to re-enter the workforce, and they were pushing carts at Walmart or Costco. That's the daunting reality, right? So I think those are very big mistakes that they make. And as I always say, you don't retire with a pool of money, you retire on income. And so it's very important to focus on your return of money instead of return on money.
So when people hear rollover, right?
Yeah.
I think the most important aspect of a rollover is that you're gaining some sort of control now, because before you were up to the benefit plan administrator, and they're not that helpful most of the time.
Right.
So what are some options that people might not be aware of around that?
So what I always say is, people ask the question, well, what do I do with my money? The more relevant question is, what do you want that money to do for you? Right? You can leave it in your existing plan, keep it untouched without any strategy. You can roll it over with your current employer, provided they allow it. You can roll it over into an IRA, which offers a little bit more flexibility, or you can reposition those assets into more protected income strategies, right? At the end of the day, you have to ask yourself those questions, like, what do I want that money to do for me? And what are your goals? What are your income needs and your risk tolerance? So it's very important to understand and get educated on those options, and what are the tax implications of my decisions.
That is my next question.
Yeah.
You're clairvoyant, because I think most people, when they hear that, what am I going to do with my 401k? The first thing you need to do is probably work with somebody.
Yeah.
You don't want to take a distribution and then
Yeah.
wait around a while, and then figure out what you're going to do later, because that's going to be a taxable event.
That's right. So yes, one thing is remembering that your retirement is tax deferred. It's not tax free. And at the end of the day, you have a long-term silent partner, and it's not your spouse, it's Uncle Sam. Okay.
It's both of them, actually.
It's both of them. And so people often, think about how much money am I going to make? It's not how much you're going to make; it's how much you're going to actually keep. Right. All right. Another thing to understand is there's specific ways to do the transfer so that it doesn't trigger taxes or penalties. If you're younger than 59 and a half and you decide to take out and you have no clue what you're doing, oh my God, people are paying 50% in taxes. That's a shocker. So it's really important to understand the tax implications and to have, and again, if you have an old 401k, please make a plan, with a tax efficient strategy. Don't just leave it there. But planning ahead and understanding your options is very critical, and the earlier you do it, the better it is.
Yeah, and I guess to finally, beyond simply just moving the money, this is a lot of investment opportunities, right?
Yeah.
It's not really actively managed in a lot of senses in your 401k.
It's not at all.
So this is a time when, now you can actually create some versatility within the account and do some things when markets do other things. You can protect it, as you said. So,
absolutely.
Talk about did you have an example, a typical example of what you see when somebody does the right thing? What happens to them?
Absolutely. So, couple of things I find. Number one is there's 4 major buckets you should be concerned about. Number one is, how do you protect that money, right? If you have a market downturn, again, if you're approaching retirement, it could be a disaster. So when you look at, let's take an example. I have a client about $1 million, all right? If they follow the 3 or 4% rule, they basically are going to take out $30,000 to $40,000 each year taxable. Right. When clients see that, they're like, does that make sense? How am I going to live on that? So we structure it in a way where that $1 million is completely protected. It compounds, right? And it generates for them a lifetime paycheck. So they never run out of money. They have no fear of that. They don't have to compromise their lifestyle. And they're able to create a legacy for their loved ones. So that is a very important thing. And we often see as well that the amount of income that they're guaranteed is a lot more than if they had done nothing.
Right. The typical investment strategy, right?
Yeah.
Nareena, thank you so much.
No, thank you.
She is the lovely Nareena Khan in Bethesda, Maryland, Tightland Capital Strategies. You are the founder, and she is a strategic asset manager. Is that correct?
That is correct.
Thank God. I got that right. You can find out more at retirementnewsonline.com. Thanks for watching.